Alright guys, what is up? Today is currently Sunday evening, and I want to go ahead and show you last week's trade, all USD 700. And let me just go ahead and show you guys the actual setup. So today I'm going to actually show you guys how I got this trade and what exactly I did to get this. And yeah, so as you know, for me, I only trade order blocks and imbalance gaps. So I trade gaps, fair value gaps, imbalance gaps, and I trade order blocks, such as the one you see here. And I'll point it out if you're not familiar with them. I'll talk about them real quick. So order blocks are basically where the bank's institutions inject large amounts of money into the market, hence why they're called order blocks, because they're blocks / engulfing candles that are filled with volume / trillions of dollars of orders from the institutions making their position. So here, there's an order block right there, and there's an order block right there. So these are all order blocks. And so how I trade it is, the first thing I do is I identify the trend and where it's going. So I look at both time frames, high and low. So on the daily, the trend was going upwards because we broke this resistance earlier right here that I have on that black line with the green dollar signs. We broke that, price broke that, as you can see. And once we broke that, as you know, whenever we see an expansion in the market, guys, whenever you see an expansion, there's always a correction or retracement. So when there's news and the market causes the news causes the market to print like this, to print a green bullish candle or a white bullish candle like you see here. And once that prints, the market, it doesn't matter how long it takes, the market will come back and fill in inefficient price action to balance the market out, because that's what the markets do. They go up, down, and then the markets need to come back down before going up, because the markets just don't go straight up. And so I figured it would come back down, and when I figured this on the 1 daily time frame to confirm that, I actually went to the lower time frame and I saw that order block. So on the 1 hour, after seeing the daily chart, that daily big giant bullish candle, I actually went on the 1 hour and I saw this order block right here. Okay, so this order block right here was the candle that I saw. And hence, price coming down to that exact line that I have, tapping in, and I targeted the liquidity up there. And yeah, guys, the stop loss was the end of that candle of the order block. And yeah, and to back up the order block even more, if we look at the volume chart that I just opened at the bottom of the screen, you can see that demand for the how high the volume was there in that area. But yeah, guys, that's pretty much all I did. That's all I trade. So I trade those order blocks like I just showed you there, and I trade actual gaps. So a gap would look like this. So if you look at that order block that I just showed you, if you look at the wick at the edge of that order block, you'll notice that it's actually tapping into a gap, which is right here. And the way I draw gaps is like that. And then this, if I'm trading, for example, this gap, if I was to trade the area where I just drew the gray box there, let me get rid of that green structure. Okay, so if I was to take a trade at that gray box there that you're looking at that candle, what I would do is my stop loss would be at the actual candle of the imbalance. So since this is the candle that I'm trading, the stop loss would be right here at the end. So I'll use my SL and I would target that, and I would target the next high, blah, blah, blah. So I trade, these are basically what I trade. All I trade are gaps and order blocks. So as you noticed, right, that's really it. That's really all you have to do. So the first tip I have for you, if you're watching this, is write this down. Master market structure, and specifically use the it depends on what pair you're trading, but a lot of the main pairs, the 5-minute to 15-minute works, and then for the long-term structure, like your 45-minute to like the 1 hour, 2 hour. But yeah, guys, it really works. So master structure like here. So like when you're doing structure, another tip is you don't want to be too zoomed in, because if you're too zoomed in, what will happen is you won't get structure from a broader perspective. You'll get like this mini structure. You want to zoom out until you can't anymore on TradingView, so that way you can see the relevant pieces of market structure. Okay, so you can see the relevant pieces of market structure. So you'll see, like we have here, the relevant pieces of market structure we have here are this low, this low, this high, this higher high, and then the higher high that was all the way up here. And so these are all the relevant pieces of market structure that hold all of this internal price action. But yeah, guys, that's pretty much it. This is a really short video. So the first tip I have for you is market structure. And you can pretty much do this on Sundays. Yeah, that's another thing I want to say. On Sunday, make sure you reset your Forex chart and delete everything on the chart, on the drawings, and that's when you want to do your Sunday structure. Every Sunday I do my market structure and I zoom out on all the pairs and I mark my highs and lows. Like NAS on a short term, the NAS pair is in the downtrend right now. I'm not buying it yet because we haven't had any break of structures, and what I mean by that is a break of structure or a change of the trend. And so if price came and continue going upward, let's say price was rising, if price was rising and broke that previous structure, which was here, then I would expect looking for some buys, because it would be breaking this structure with a large amounts of demand. We would see aggressive bullish white candles or green candles breaking this high, causing there to be an order block or an imbalance left behind. But yeah, I'm waiting for price to break that structure with the arrows pointed to before I buy any NAS, and I'm just gonna pretty much let it do its thing and actually just move. So yeah, guys, on the Euro USD, I marked that structure. Sorry guys, hiccups. On the 45-minute time frame, I zoomed all the way out. As you can see, we're zoomed all the way out, and zooming all the way out in Forex allows you to see the broader perspective. It allows us to see all the highs and lows that are actually relevant that we want to be trading. And so the highs and lows, which are here, so we see this low here and we see this low here, and we see that high there and that high here. So these are all the significant pieces of structure. So that's another thing you want to write down on your notes. Write down the significant pieces of market structure that you need to trade, and don't zoom too much in and draw every piece of market structure. Zoom all the way out. And so here for the Euro USD, another reason why I'm expecting a bullish trend is because on the daily time frame we actually broke a low. A high, because price came and broke right here. This current price right here came and broke this previous high right here. And so after it did that, we had the black candle come and we had a little tap right here in this imbalance gap. So I'm actually waiting for my signal, which I actually can start trading now, because price actually, if we look in between the current pieces of structure here, which are this high and low, if we zoom in, we notice that price broke structure. So we have a break of structure right here, and I'm going to draw it with the trend line, with this red line. So price came and broke that high right there with those white candles, broke that demand, broke that high, leaving behind what? Gaps. And so price can either come back down and fill in these inefficient gaps here, or price can continue going up. And so I'm either going to get in the trade there or later on, depending on the news and the volume, because tomorrow is supposed to be a Euro bank holiday, so I don't really know about trading it tomorrow. But yeah, guys, this is a pretty short video, and this was pretty much how I got that trade on. This was mainly how I got this trade right here, but I wanted to show you guys a couple things on some other pairs too. And yeah, guys, so that's pretty much it. So the first thing is structure. The second thing is once you have your market structure, so if you're either bullish or bearish, what you want to do is you actually want to, if you're buying, you always want to be buying at the lower part of the range, and if you're selling, you want to sell high. So buy low, sell high. And that tip that I just gave you, you can write down too under your market structure, and that tip only is only applicable after market structure. So yeah, guys, that's pretty much it. It's that simple. I only trade these setups for like months, just months and months on. I've been trading since about 2018. I've been in and out. The last 2 years are the years I've been really mainly focused on the smart money concepts. And yeah, guys, it's pretty much easy. If you want to talk to me, if you want to like learn my full strategy and stuff, I have an ebook and all that. You can message me. But yeah, guys, I hope you found value out of this video. Peace.